Kevin Hincks joining me alongside Jenny Horne in the studio this afternoon. It kind of looked like about an hour and a half ago, Kevin, that maybe we were going to do that kind of Friday fade behavior, but we're hanging in there okay right now.
Remember, it's the middle of summer, and but we are coming up to July monthly expiration. That's significant. But I think more than normal, Oliver, based on Friday, people are going to be paying a little more attention to the last half hour, just to make sure that this closes without event.
So it doesn't get too wacky.
Exactly. Because, let's face it, even though we're having a nice up day in all four indices, the E-minis and the NASDAQ are just back to where they were at that 230 mark, up about, between 40 basis points and 50 basis points is what they sold off in that last half hour. So we're watching them here and just make sure that nothing jumps out. I think the Friday, Monday action in the VIX a little stronger than it might normally be on a summer Monday. So a little bit of a tension there, but it's still a summer Monday, Oliver.
Sure.
I just refuse to get my heart rate up too high.
Okay. If we keep having events like we do over the weekend, then the summer might get busy. All right. Look, let's talk Powell real quick. Kev, give me a thought first, and Jenny wants your thought as well.
I listened to most of it. Now, David Rubenstein gives a pretty good interview. He got a little more personal with Powell on his habits and what he does. I thought it was one of the better interviews I've heard with Jerome Powell. And
we said it probably would be.
So he got it. Yeah, he got a little more personal. I thought it was great. But Powell still gave no nod or any, any look into what he's doing with
He did say confidence.
Yeah.
And he did acknowledge the unexpected weakening in the labor market. So I think that was extreme. Rarely do we hear him acknowledge the most recent data, which he kind of did.
You've been doing that now lately.
I'm a fan of it.
I've been noticing that too, where he's kind of given weekly updates in a way, where he was responding to recent data. And I thought that was important, Jenny, that he did talk about how things are in a little better balance now. The economy slowed down a bit. He acknowledges that. And then inflation slowing down. Maybe he's setting us up for a little Jackson Hole action. And
then the Jackson Hole, we have seen markets react in a different way to Jerome as of late. Because for a while we said he was the biggest friend to the market. That hasn't so much been the case. And the Jackson Hole just reminds me of hey, we are capable of selling off. FOMC meets the end of this month. I know that we don't have that July Fed meeting, but it does feel like we're setting up for a very interesting August now.
Right.
The one interesting thing.
We got July, but no August meeting.
Yeah.
Correct.
September. One last thing. I thought it was interesting that they talked about the fact that Jerome Powell is not an economist by definition, and therefore he gives a non-economist educator view of the economy that's more plain, that more people can consume and digest. It's more common sense.
Yep.
And I think the market really likes it. We say it all the time on this show, how he gives information to the markets they like. I think he gives a very common sense look, and I think the markets respond to it.
Yeah, all right. Love people who can summarize economic and market information in a way that's digestible to a wide range of viewers.
Yeah. Are you saying you?
All right, let's talk Salesforce here for a sec. This is a sleeper story on the day, though, but I think it's important, Jenny, because cloud companies have been really, really soft. The tech stuff just kind of dragging a little bit. And speaking of jobs, Salesforce is cutting some jobs.
Yeah, and when are we going to talk about the fact that the Salesforce this is now their third cut of jobs since the start of 2020, or since the end of 2023. This is basically their third now round of layoffs. We don't know the exact number. I did see around 300 workers, 700 was earlier this year, but so it's not a significant amount. 700 was earlier this year, and then we did see around 10% of their workforce was cut back through the beginning of last year. But I think what this is interesting is it shows that Salesforce still needs to cut costs. We talked about the year of efficiency. We haven't heard those terms in a while, but Salesforce is obviously still reeling from the fact that they're still needing to reduce their overall cash flow, basically. And any statement they did say they paired some of these jobs without getting specific. They said that they're just the number of one of these several tech names that has recently had to ramp down their hiring. This is a problem.
Yeah, well, it's a problem for the stock too, because I feel like it's gone unappreciated or overlooked, or I guess maybe the market just doesn't care that all the cloud companies have been in decline, but it is very important because we've got earnings season coming up, and there's a huge difference between the cloud companies and the hardware companies. Software versus hardware is in a totally different spot right now.
So software names like UiPath, OpenText had layoffs earlier this month. We also did have Intuit, 1,800 employees last week. So that speaks exactly to what you're saying, where these software names are just like, we're seeing this continued divergence in performance. And not only that, but like in terms of like how healthy these companies are, they cannot keep employees.
Yeah, robots. I think they're disrupting them.
It costs a lot of money to buy AI.
Yeah, well, that too, and I think in the case of a lot of these, that people are also going to get replaced by AI, and some of the products too as well at this point. So, all right, we got to jump. Thanks, Jenny. Thanks, Kevin. Hanks. Appreciate it.